we know that fixed deposits are now available for as high as 10% for a 5-year fixed deposit. Now, if you started an FD about 3 or 4 years ago, chances are it's only paying you about 6% or 6.5%. So does it make sense for you to break that old deposit and reinvest the same money in a new deposit with a higher interest rate? We did some number crunching. Take a look. In a battle to tame rising inflation, the RBI has been on a rate hike spree this year. The short-term lending rate or the repo rate now stands at 7.5%, and the borrowing rate or the reverse repo rate stands at 6.5%. Now, while this means higher EMIs for borrowers, it also means higher earnings for investors in fixed deposits.
So we're seeing fixed deposits being offered in the range of anything between 8.5% to 9.5% to retail customers. A good way to take advantage of this opportunity is to actually invest in a fixed deposit with a bank, because if you're getting a risk-free return at 9.259%, it's a good return for an investor.
The interest rate on your fixed deposit depends on the money you invest and the term you opt for. So does it make sense for you to break your old deposit that's paying you a lower rate and reinvest that same money in a fixed deposit with a higher rate?
The penalty for breaking a term deposit is 1%. It's typically 1% which banks charge. So whatever is the interest rate that you earn for the time period for which the funds stayed with the bank, less 1% is what the interest which would get paid in the situation of the customer prematurely breaking a term deposit.
So as an example, let's assume you invested in a 5-year deposit with a rate of 7.25%, but you decided to break your investment in 2 years. You will then be given the 2-year rate, which was 6.5%, minus a penalty of 1%. So your final rate would then be calculated at 5.5%. Now, if you were to reinvest that money at the new rate of 9.5% for the next 3 years, let's take a look at your total earnings. Now, if you'd stayed in your original deposit for the full 5-year term, you would have earned 42,772 rupees. If you broke that deposit and switched to a fixed deposit with a higher rate, you would earn 47,248 rupees. So that's a saving of 4,500 rupees.
Today, I can potentially invest that amount at a 9.5% if I get a great offer. And even though I'm eating a penalty, the calculation shows that my interest earned is roughly about 4,500 rupees more by breaking the FD and moving on. So one actually needs to build a table year by year to say what the interest earned in each scenario is, and then compare what the total interest in the two scenarios are.
Now, we know that's a lot of calculations for you to do, but the final savings will vary for each case. So you need to sit down with your banker and work out the calculations before you make your decision. And remember, if you're reinvesting, pick the longest term available on your new deposit.
A lot of customers may actually choose a 1-year or a 6-month rate just because it is quite high. You have to keep in mind that 1 year later or 6 months later, you may or may not get the same attractive return. So in that sense, if you believe that interest rates are already quite attractive and therefore you can afford to keep aside your fixed income tenor for a portfolio for about 4, 5, 6 years, then it may be a good idea to invest it for that period.
So just to help you with those calculations, we're leaving you with a list of fixed deposit rates for a 5-year deposit currently from the top 10 banks in the country. Alright, so make sure you carefully check the numbers before you decide what you want to do with your fixed deposit.